Welcome into Market Day Report. Well, I don't know why this Lean Hogs is not on my screen lit up like that. I'm going to try to get rid of it for us. There you go. Maybe that, well, I don't know. All right, there we go. A little technical glitch there. Let's talk about what we've got going on in these markets overnight, right? Because they haven't opened up yet here today. I just did the radio show, and really the talk of the town was that GDP number we just got. But let's start with corn and see what we did overnight. Corn was quiet overnight. We're up just a half cent. We got May 438 and a quarter. And we've got about, a 3.5 cent range. So there you go. We're up between a tick or two across the board when it comes to corn. Maybe we still have wheat dragging it higher a little bit. This is not working in the beans, though. We're down 8.25 cents overnight to 11.57 3/4 in the May. And we've got an 11.66 3/4 in the Nov. We just want to see that $12 handle there sometime, don't we? Boy, oh boy. How about the wheat? This is where we did see some strength earlier, 2.5 cents higher in that May contract. This is Chicago. We had a 605 up there, right? We were hanging a 6 on that, but we just couldn't hang on to that as we went out 597 last in that May wheat. We have a D-Sweet in Chicago up 1.75 cents to 655 3/4. Hard red is up a penny and a half to 625 3/4. All right, that's May. Go out to the D there, that's up 1.75 cents to 662 1/2. So we don't have as much juice in these wheat markets as we have had the last few days, but they're still all better. Spring wheat's up 3.5 cents to 682 1/2 in the May contract. We're up 4 cents in D's to 710 3/4. Finally, let's go to cotton. I don't remember that was doing very much overnight. It's 49 points lower in that July contract to 81.50. We've got D's. That's 49 points higher. Sorry, to 81.50. We got D's up 33 points to 78.02. So a little bit of a bounce in cotton, and that gives me our chance to bring in our next guest. And it's from Brian Hoops, Midwest Market Solutions. He's the president there. All right. Anything tickle your fancy when I talk about those numbers overnight or anything that maybe happened yesterday? What are your thoughts?
Well, you mentioned that GDP number, Scott. It was a disaster of a number. You look at 1.6% GDP. That's less than half of what it was in the fourth quarter. We've seen a big sell-off in the stock market. And I think for our producers out there, especially in the livestock sector, recognize that this economy is not very strong, and the stock market is starting to recognize that now, and that is going to hurt consumer demand. And that's one of the fears that we've had going back several months, is that consumer demand, especially for beef and pork, is going to fall off the table because of a poor economy. The export sales numbers that came out this morning, they were pretty decent all the way across the board. And what I found interesting is that China was the biggest buyer of corn, soybeans, wheat, cattle, or beef products, and they were one of the biggest buyers of pork as well. So we're really dependent upon that Chinese market for our export numbers. And these were decent numbers that we saw this morning. Probably the real key is what happens in the wheat. As you mentioned, it's not as strong as what it was in the last several sessions. Maybe we're starting to run out of gas a little bit there. It's raining here in Springfield overnight. We're expected to get more. And there is a lot of rain across all of Missouri. Parts of like Tulsa, Wichita going to get some rain as well. And those are some areas that badly need it, with that western part of Kansas, Dodge City area, badly needing some rain and really not getting much. But there is rain for that hard red wheat belt, and that should kind of slow down those decline in the crop ratings come next Monday.
Yeah, I mean, whether or not the wheat pulling up the corn and beans is getting a little long in the tooth, I don't know. But back to what you led off with is that GDP number. And, because it came in so bad, I would have thought, well, part of me thought, maybe we'll see with the stock market rally, because everybody's going to start thinking maybe they'll have to cut rates, right? And that would be a natural thought. However, there is the other side of that coin, and I think that argument's winning right now. I think that, we're borrowing billions of dollars a day, so we have to sell bonds to do that, right? And if our economy is weak and we don't have a lot of confidence from our investing community out there that wants to buy our bonds, if bond prices drop, that means yields go higher, and that 10-year yield has spiked. So I'm thinking that this is a little bit of a vote of no confidence in the economy, if you get my drift there, rather than, hey, maybe we have to cut rates. You know what I'm saying?
Yeah, I think the Fed's in a really tough spot. They need to cut rates, but they really can't afford to cut rates. And I think what you're saying about the economy is spot on in here. You look at foreign buyers, they apparently still see a lot of value in the U.S. dollar, as we're trading up in the 106 range for the dollar. We're a little bit stronger here again this morning, and that doesn't bode well for commodities either. I think the best chance for rallies in the commodity sector this summer, obviously, if we have some sort of a drought, and I think these rains that we're getting are going to kind of ease some of that talk. In fact, we're about 4-inch deficit here in Missouri. We could eliminate that deficit just this weekend with this one rain event. That's how much rain we're expected to get. The other chance for a big rally in the commodity sector comes from maybe some of these funds look at some commodities and think they're just cheap. And because of an inflationary hedge, we're going to buy corn, we're going to buy wheat or soybeans and see if those markets respond to it. They seemingly did that in gold and silver. Now that buying interest has faded. At some point, that buying interest fades as prices do mature or rally. And those really are best chances. But as we talked in your radio show yesterday, you got to pick a point in here. We're almost to May 1st. We're getting the crop in the ground. A little bit of a bounce because of planting delays. You have to reward that rally, get some put options underneath you.
I agree. All right. That's the dangerous part of this whole thing is you and I agree. Okay. We're gonna go away. Let's pay some bills. We're gonna come back and talk more with Brian Hoops. We'll be right back right after this. All right, welcome back to Market Day Report. I do so many shows. I almost said commodity wrap. I mean, maybe the cow guy closed. I'll say that too. Anyway, let's take a look and see how we closed yesterday. I'm not going to get caught up on this. I always keep thinking we're open when I bring these prices up. But this is how we closed yesterday, and we could see it was weak. This is live cattle. That June market was the heavily quoted one that was off $1.90 yesterday to 175.25. Go out to the D, so it was off $1.40 to 182.55. We also were a little lower in the feeders as well. That May board was down $1.95 to 244.10, and we had a $3.10 sell-off in the August to 256.30. See if we can reverse any of that here today. And then lean hogs, well, they closed down. We're going to go down 50 cents in that June contract. 107.45 is where we stand there. All right, let's bring in back in Mr. Brian Hoops with Midwest Market Solutions. He's the president there. How do you think we're going to come out of the box here this morning? I guess that's the nitty-gritty.
Not really much in the way of influence from the cold storage report out yesterday or the export sales for beef or pork this morning. Pretty much in line with what was expected, where we've been at here recently. Cattle market maybe is a little bit overdone to the downside. I know talking to feedlots on Monday after that big rally in the futures, they were hoping we were going to get 184 to 185 cash cattle trade in the Southern Plains. And that didn't happen. We're 182 steady with a week ago. So we probably overdid it to the downside yesterday. I could see a little bit of a recovery here this morning. But with that drop in the stock market, concerns about the economy, again, you have to be thinking selling rallies in the cattle market and doing some hedging rather than trying to get bowled up and get long for much higher prices going into the summer. I don't know that it's going to be in the cards.
Yeah, I mean, I talked about this earlier this morning too. It's like I get in trouble for being a cheerleader, right? I want to see $5 and $12 and as high beef prices as we possibly can. But you also have to build in, like you do in any good business, the bad parts. Like, what's my plan B if this thing doesn't work out? If I don't see a short cover rally, or if we do see a stock sell-off, what does this do to my beef prices? And you have to make sure that you've got a plan for that too, right? So if you can live with the good one and live with the bad one, then you can sleep. And I think that's the most important thing, right?
You bet. That's why we've been talking about puts, call scenarios, fences, windows. It gives you a chance to sleep, gives you a chance for upside potential, gets your downside protected, and let you sleep at night.
Another thing that lets me sleep at night is that I get to come here early every morning and put your face next to mine, and I realize how much hair I don't have. All right, that's unbelievable. I am almost bald compared to you. All right. Thanks for coming on, Brian Hoops. He's president of Midwest Market Solutions. Bring it back here to Christina, and it's part of getting old.
No, his hair is luscious like a field of wheat.
When I go get my hair cut, I get all 4 of them cut.